Hello everyone. In today's video we are going to discuss with regard to the very important topic, that is income from house property and its related tax savings available to an SSE. The constructing or purchasing a new house property is a dream of everyone, but accordingly there will be a lot of responsibilities with regard to the taxation, and also accordingly I will also discuss in this video about the tax savings that you will get in respect of your income from house property. So this is Abhijith Acharya welcoming you all for today's video. If you are not subscribed yet, please subscribe to my YouTube channel and please watch till the end. Let's discuss today's video. First of all, I will discuss with regard to the classification of that house property. That one house property is classified into self-occupied house property and let-out house property. First one, that is self-occupied house property. That meaning is it is used for one's own residential purpose. It is occupied by the taxpayer's family, that SSE who are going to pay the income tax. No, he and his family is residing in that house property. It is called self-occupied house property. If one SSE, if you have more than two house properties, two self-occupied house property, then as per income tax law, only maximum two house property will be considered as self-occupied house property. Remaining self-occupied house property are treated as deemed to be let-out house property as per income tax rule. Up to two self-occupied house property, remaining house properties are considered as deemed to be let-out house property. In short, DLOHP. The second classification is let-out house property. What do you mean let-out house property? The house property which is been rented out, which is been let out for any other person for staying. This SSE being the registered owner, he let out his house property to any other purpose for rental purpose. This registered owner will receive the rent, monthly rent from that person. That another person is called tenant. Understood? This is a brief classification. Then first I will say, sir, how to compute the income from house property. If you have income deriving from that house property, how you are going to discuss with regard to the calculation, how you compute, how you arrive at that income from house property. There are 5 steps. If you follow the 5 steps, then you will arrive at the income from house property. Number 1, determination of gross annual value. The meaning of gross annual value I will discuss in the upcoming slide, but keep remember that as for SOHP, that is self-occupied house property, this gross annual value will be nil because you are only residing in that house. No, how will you generate that income? If you are rented out, if you are let out your house property, then at least rental income will be a gross annual value. No, but in case of self-occupied house property, your value is nil. No, that is for 100% sure that you are not going to receive any income generating from your self-occupied house property, and hence for self-occupied house property it is nil. For how to compute a let-out house property's value, we will discuss in the upcoming slide. Step 2, you have to reduce property tax paid or municipality tax paid, actually paid in the year from your gross annual value. It is mentioned that in the bracket that it is cash basis. That means for which and all year you have paid in this current year will be reduced from the gross annual value. Then you will arrive at a net annual value, GAV, that is gross annual value, minus property tax paid in this financial year, actually paid. This on cash basis. Whatever you paid in the current period will be treated as a municipality tax actually paid. Then you will arrive at a net annual value. Step 4 will be flat 30% deduction will be allowed against your net annual value. It is absolutely nil for self-occupied house property because GAV is also nil, NAV is also negative, should not be negative, NAV should be nil, and hence standard deduction of 30% will also be nil in case of self-occupied house property. In case of let-out house property, we will discuss in the next example and next slide. Why this 30% is allowed? Because you cannot additionally claim with regard to the expense, with regard to the insurance of house property, insurance paid or repairs and maintenance expenses. You cannot additionally claim. All these are combined into 30% deductions you will get. Next, step 5, reduce the housing loan interest actually due. If you have borrowed any loan in respect of your house property, if you are paying any interest, then that interest portion will be reduced from that NAV. Then after all, you'll arrive at an income from house property. Understood, no? NAV minus flat deduction of 30% minus a housing loan interest paid or due, then you will arrive at an income from house property. This is a brief explanation. This is the steps. Next, we will consider with that already discussed. What you mean by computation of GAV? There are 5 steps. There are few steps. I have categorized the house property into 3. SOHP, that is self-occupied house property, LOHP, let-out house property, and deemed LOHP. What do you mean deemed LOHP means? If you have more than self-occupied, more than two self-occupied house property, the remaining will be treated as deemed to be let-out house property. Understood? This is the deemed let-out house property meaning. First, municipal value or fair rent value. First, remember for SOHP that GAV should be nil. Always be nil, because you are not generating at all any income, right? Then how can you generate how can be the value? Even though there will be value as per municipal value, but you are not generating any income, right? You are only residing in that house property, right? And hence, as per income tax rule, GAV for SOHP is nil. Next, we discuss with regard to the LOHP and deemed LOHP. First, municipal value, the value determined as per the municipality record, or fair rent, the rent of the house property which is in the same location apart from your house, wherever your house property is located. No, the nearby house property, if the same house property is rented out, then what will be the rent of those other house property is your fair rent house property. Municipal value or fair rent, whichever is higher, will be the third line step, which is always nil for SOHP. We are going to discuss with regard to the LOHP and deemed LOHP, whichever is higher. That higher portion should be compared with the standard rent. Standard rent means rent as prescribed by the Rent Control Act. There is one act called Rent Control Act. Standard rent, that should be value will be compared with the standard rent. It should be reduced, and whichever is lower, that portion is called expected rent. Next, that expected rent should be compared with the actual rent received. It is always nil for SOHP, and hence we are only discussing with regard to the LOHP and deemed LOHP. Okay, expected rent with actual rent, whichever is higher, that portion higher value is called GAV. Okay, but deemed LOHP, it is only a self-occupied house property. You are not going to receive any income, and hence actual rent will be nil in case of deemed LOHP. And in case of deemed LOHP, always GAV will be always expected rent. But in case of LOHP, you are also receiving the rental income. So actual rent received or expected rent, whichever is higher, will be treated as GAV. Understood, no? This is the brief explanation how you derive the GAV. GAV, you should be after GAV you should minus with property tax, then you will arrive at a NAV and 30% standard deduction, then you have to reduce housing loan interest, then final amount will be income from house property. Understood? Next, we will discuss with regard to the tax deduction, tax saving. I already discussed it in the heading of in the introduction part. Tax deduction on home loans. First, tax deduction on HL, which is mentioned under section 24 subsection B of Income Tax Act 1961. In case of self-occupied house property, deduction of HL interest is restricted to 2 lakh. Whatever you interest paid to any banks or financial institution or your friends also, that interest portion will be restricted to 2 lakh only. In case of let-out house property or deemed to be let-out house property, that entire HL interest due in that financial year will be treated as a deduction. If your interest paid during the financial year, during the said previous year, for let's say for example 3 lakh, that entire 3 lakh will be treated as a deduction. But in case of self-occupied property, even though you have paid a 3 lakh of interest amount, it should be restricted to 2 lakh. But in some cases, in case of self-occupied house property, the limit is 2 lakh. But instead of 2 lakh, in some of the following cases, that 2 lakh is restricted to 30,000 interest portion. Please remember. What are those cases? What are those circumstances? First one, if housing loan is taken before 1st April 1999, if you borrow in your housing loan on or before 1st April 1999, or a housing loan is taken on or after 1st April 1999 for repairs purpose and renewal purpose of your house property. It is not for your construction and any purchase of new house property. It is our existing house property. Only for renewal purpose, only for repair purpose you have borrowed that loan on or after 1st April to 1999. In that case also, that 30,000 only will be that restricted amount. In third case, if that housing loan is taken on or after 1st April 1999 and the purpose is for purchase of a new house property or construction of a house property, but that construction is not completed within 5 years from the end of financial in which HL is borrowed. As per income tax law, if you borrow a housing loan only for the construction purpose, let's say that construction should be completed within 5 years from the year in which that housing loan is borrowed. If you are not constructed your house property within the said stipulated period, then instead of 2 lakh amount, your limit is restricted to 30,000. In these three cases, in these three circumstances, that especially in case of self-occupied house property, that 2 lakh limit is restricted to 30,000 as an interest on housing loan property. Okay, some of the points to remember. First, HL interest cannot be claimed as a deduction when housing property is under construction. Okay, then period from HL borrowing date to the completion of construction of house property is called pre-construction period. Until your house is fully constructed, from the date of housing loan borrowed, that period is called pre-construction period. Sir, why is it important? It is very important that what you have paid as an interest in this period, in the period of pre-construction period, will be treated as pre-construction interest. That will be allowed as an interest in a 5 equal installment starting from the year in which your house is fully completed. For example, you have borrowed your housing loan in the year of 1617. Let's say your house is fully completed in the year of 2021. Okay, up to 1617 to 2021, what you have paid is called pre-construction interest portion. That pre-construction interest portion should be allocated in a 5 equal installment along with the current year interest. That means starting from 2021, that pre-construction interest should be allocated in 5 equal installment. Let's say that pre-construction interest 1 lakh, that should be apportioned in the 5 equal installment. That means 20,000 each. 20,000 plus 2021 ka interest, that both will be allowed as a deduction under section 24 subsection B as an interest on housing loan. But keep remember, in case of housing loan in self-occupied house property, that pre-construction interest portion plus in that year portion should be restricted to 2 lakh. In case of lettered house property, it can be unlimited. Okay, this is a point. Next, joint ownership. Joint ownership means the same house property, the registered owner is several members. Let's say husband and wife are the co-owners for the same house property. This is called joint ownership. Then how your income from house property is calculated normally. Thereafter, it should be divided in the ratio of their ownership ratio between those co-owners. Brothers, first brother and elder brother and smaller brother, or husband and wife, that house property is divided into co-owners. Okay. In case of joint ownership, that interest on housing loan, how you categorize it? In case of self-occupied house property, or in case of let out house property. In case of self-occupied property, that limit is 30,000 or 2 lakh as the case may be, into number of co-owners. Let's say that is 2 lakh is the limit. If your house property is, the registered owner for your house property is 2 persons, let's say co-owners, the 2 lakh into 2, that will 4 lakh will be the benefit. Understood? In case of lettered house property, that entire housing loan interest paid as and you will get as a deduction under section 24 subsection B. But in case of self-occupied house property, that restricted portion, that is 30,000 or 2 lakh as the case may be, into number of co-owners will be the interest deduction portion limit. Understood now? Next, tax deduction on home loans. Under section 80C, deductions I have already discussed it in my earlier videos. If you have not visited, if you have not watched it, please watch, and I will also provide the link in the description box. Deduction up to 1,50,000 already said, and actually this is only the principal portion. Housing loan must be borrowed only for the purchase or construction of that new house property. That such a house property should not be sold within 5 years from the date of possession of that house property. If sold, then deduction claimed in the earlier year shall be added back to your income. In simple words, it shall be treated as your income. Please remember, it should not be sold within the year of 5 years from the date of possession. Okay. Stamp duty paid and registrant charges also paid will come under this standard deduction, and this 1,50,000 come within the 1,50,000 limit, 80C. Okay. Next, tax deduction of home loans, set off and carry forward. In the maximum set off is up to 2 lakh. If you incur any loss, that can be carried forward until the 8th assessment year. But remember, this is very important. If your return of income and if you file your income tax return after the due date also, you can carry forward this loss to the 8 years. In other cases, short-term capital loss or long-term capital losses or any other losses, it cannot be carried forward until you file your income tax return within the due date of filing an income tax return. But especially in this case, if you file your income tax return after the due date also, then that loss portion can be carried forward to the carry forward to the 8 years. Okay, this is a benefit available. And next, and we have discussed all the theoretical aspect. Now we will discuss into the more practical aspect, so that you will be in a better position to understand this concept thoroughly. Mr. Anand has earned a salary of 10 lakh during the financial year previous year 22-23. He also paid an interest HL interest for self-occupied house property of rupees 4 lakh. Remember, it should be restricted to 2 lakh. And received a rent of 7,000 per month. He is also having another house property which is being let out. He actually, in this problem, he is having two property. One is self-occupied and another is let out house property. In respect of self-occupied, he has paid interest of 4 lakh. It should be restricted to 2 lakh. In case of another house property that is being let out, he is receiving a rent of 7,000 into 12, that is 84,000 rent. This is a brief of this question. Let's see our answer. Computation of taxable income of Mr. Anand. Salary, income from salary 10 lakh minus standard deduction under section 16 will be allowable under him, and already discussed it in my new scheme or new old scheme video. If you have not watched it, please go and watch that. I will also provide the description in the description box. So 9,50,000 is the income from salary. And income from house property, in respect of self-occupied house property, GAV and NAV is also nil, and standard deduction of 30% under section 24 subsection E is also nil, since NAV is nil. So HL interest is restricted to 2 lakh. Understood? In case of a self-occupied house property. Let out house property is also let out is another house property for 84,000 as a rent. Standard deduction of 30% on 84,000 will come around 25,200, and net let out house property is 58,800. If you add those three, self-occupied house property loss, let out house property income, and then that house property loss, that is 1,41,200. That's a loss. Income from salary can be set off. That loss from house property can be set off against salary income, and hence his net total income is 8,08,800. On this, he has to pay tax, assuming that he has not claimed any other deduction under section 80C and 80D. Understood? That remaining 2 lakh is there. No, remaining 2 lakh HL interest is there. No, that loss can be carried forward till the 8th assessment year, starting from assessment year 24-25. Understood? That is previous year 23-24. Okay. Till 8th assessment year, that loss can be carried forward. Because since it is a self-occupied house property, that only restricted to 2 lakh. So remaining 2 lakh can be carried forward to the 8th assessment years. So this is a brief explanations with regard to the income from house property and also the tax saving benefit applicable to an SSC. And if you like the video, please like the video, and if you have not subscribed yet, please subscribe to my YouTube channel. And if you want more videos, interesting like videos, please press the bell icon button. So if you have any doubts and if you have any clarification, please be free to mail to me and also WhatsApp me the provided credentials. Thank you one and all for watching till then. Thank you.